So the risk for investors here is that both stocks are now exposed to some degree of regulatory risk, right? We've overcome the hurdle in Europe. What is it going to take to get this approved in the US and the UK, which, as you say, seem less inclined to provide Microsoft with that green light?
Oh, you're exactly right. And it's funny, Microsoft was traded at 302 last January when this deal was announced. They're at 309 today, so they're about 600% higher. Activision Blizzard was traded at $82 a share last January. They're at $78 today, so about 5% lower, 13% lower from the $69 billion buyout price. I think they just need to be proactive. Microsoft's putting their money where their mouth is. They're not just using words. They're actually, in December, they went to Nintendo and said, we want to give you a 10-year contract for Call of Duty to be made available on the Nintendo Switch. That's something Activision Blizzard didn't even do. Activision Blizzard and Nintendo didn't do that. Microsoft said, we want Call of Duty on non-Microsoft hardware. And then they've offered Sony. Sony's been the biggest detractor here, working along with the agencies trying to block this for obvious reasons. They want to protect their PlayStation franchise. But Microsoft seemingly has offered them a 10-year arrangement to have Call of Duty on PlayStations on the same. It comes out for Xbox. So they truly are being proactive in trying to get this thing to the finish line in the UK and the US.
Exactly, and it does seem as if the view within Microsoft is that a rising tide is going to lift all boats here, or at least that's what they were positioning with the Europeans. The Europeans also say that this approval is going to generate more competition in the cloud segment of the industry. So I'm curious to know exactly how that's going to materialize in the future, and what does this approval mean for other developers also operating within this space?
Well, no, I think that's right. And what the argument Microsoft and Activision Blizzard are making is this deal is good for competition because it creates more investment, more innovation, which creates more games, more game developers, more game platforms, and frankly, more new gamers who aren't necessarily Microsoft clients or Xbox users. They may be using other means. I would just say gaming is such a small part of Microsoft. It makes up 8% of the revenues. Microsoft, 60% of its business is a legacy business, which is Office and Windows, and then servers and cloud. And cloud is obviously the fastest growing, having grown 43% last year. Microsoft had $16.2 billion in revenues for gaming, and Activision Blizzard has $8.7 billion last year. So this gave them up to about $24.9 billion, from 8% to 12% of revenues. And they really want to try to drive content on their Game Pass on the cloud. They want to be the Netflix of video games, and obviously the Xbox console and Xbox PC.